All right, let's get right into it. In this HDIN Research Explainer, we're breaking down one of the biggest moves in the food technology space, the huge merger between JBT and Marel. We're going straight to the source, digging into the company's very first 10K report to really see what this new giant is all about.
This is the big question, isn't it? When two massive companies come together, it's not just about getting bigger. It's about becoming something fundamentally different. So, what does that new company actually look like? Let's dive into the data and find out.
So, as independent analysts, we've combed through the numbers, the strategy, and all the fine print. What you're about to see is the inside story of the new JBT Marel, and it's all based on what they've reported themselves.
Okay, so first things first, you have to understand the game plan here. This wasn't just about combining two companies. It was a total reinvention. By selling off its aerotech business, JBT made a really clear statement. They are going all in on becoming a single dominant force, a pure-play leader in food and beverage tech.
The deal officially closed right at the start of 2025, and what it did was bring together two incredible complementary portfolios. Think of it like this. You had two master mechanics, each with their own amazing set of tools. Now they've combined them into one ultimate toolkit that can handle literally anything in the food processing chain.
So the strategy sounds good, but is it actually working? Well, to figure that out, you just have to follow the money. And that money trail leads us straight to the company's new engine room, the Protein Solutions segment.
Now this number right here, this is a big deal. 20.1%. That is an incredibly healthy profit margin. It tells you that their core business, making equipment for poultry, meat, and fish processing, isn't just huge, it's super profitable. This is the bedrock of the entire company's earnings power. Look, big margins are great, but a truly healthy company has to generate cash. Cash flow is like the ultimate vital sign of how well the business is actually running day to day. So how'd they do in their very first year?
And there you have it. Nearly $250 million in free cash flow. I mean, pulling that off right after a massive merger, that's a huge sign of strength. It shows the integration is working, the operations are humming, and they're generating cash that can be used to pay down debt, fund new ideas, and just grow.
Now let's talk about one of the most important parts of this whole new business model. For anyone watching the industry or thinking about investing, this is where the story gets really compelling. We're talking about their defensive moat. Just look at that perfect balance. A full 50% of the company's revenue is now recurring. So what does that mean? It's money that comes from aftermarket parts, services, and software. All the stuff that happens after the big machine is sold. It creates this incredibly stable, predictable stream of income.
So why is this such a game changer? Well, think about it. Selling big, expensive equipment can be super volatile. It goes up and down with the economy. But that recurring revenue, it's like a steady paycheck. It's way less sensitive to economic swings, which makes the whole business more resilient and protects them during tough times. It's a fantastic stabilizer. Okay, so we've established a strong foundation, great profits, tons of cash, and a stable business model. But where is JBT Marel heading? Let's connect the dots to see how they're setting themselves up for the future. Sustainability isn't just a buzzword anymore. It's a real competitive advantage. JBT Marel's technology directly helps their customers use less water, less energy, and create less food waste. And that's not just good for the planet. It's a massive selling point that solves a huge problem for their customers all over the world.
If you want a clear sign of where things are going, this is it. Inbound orders more than doubled in just 1 year. That is staggering growth. It shows the market has a ton of confidence in this new company and that demand for what they offer is really heating up. And here's the kicker, and this comes straight from the report. That huge pile of orders they expect almost all of it, 85 to 95%, to turn into actual revenue within the next year. That gives them incredible visibility into their performance for 2026.
Okay, so we have looked at the strategy, the profits, the cash, the business model, and the future outlook. So what does it all add up to? What's the bottom line here? When you put it all together, the key takeaway is this. The merger wasn't just about getting bigger. By combining that high-margin core business with a powerful recurring revenue engine and a strategy that's perfectly aligned with global trends, JBT Marel has really built a company designed for stability and long-term growth. This has been an HDIN Research analysis. For deeper dive and more of our data-driven explainers, be sure to visit us online. Thanks for watching.